let's start off by talking a little bit about why you actually got into banking and what would make any of us walk over and start banking with you guys.
Do you want me to go first?
Sure.
Yeah. Okay, so hi everybody, Taryn, head of strategy at Questrade. Great to be here today. I think when you look at it from a pure investment thesis standpoint, the total addressable market in banking is significantly larger than the addressable market in direct investing. When we mapped out sort of our product roadmap over the next few years and what addressable market that implies, it was at least 10 times, if not bigger, than the market we play in today. So entering banking gives us access to new and growing profit pools, but also that's still adjacent to the core space we play in today, which is the direct investing space. In addition, we do think Questrade has sort of a unique position in the Canadian landscape. It's been around for 26 years and is one of Canada's oldest fintechs. Both of those pieces are equally as important because, as we know, trust is really critical when you're trying to win over the Canadians' core banking relationship. It's come through in so many studies, but in the J.D. Power study last fall, it showed that trust is actually the #1 predictor of how satisfied a customer is with their banking relationship. And we think Questrade, through our 26 years of operating history, as well as the move to zero commissions recently and our commitment to really providing transparent fees to customers, allows us to win the customer's trust and play for that core banking relationship. We also have a great base to start with. We have existing customers who have already decided to move a core piece of their financial lives over to a non-bank player. So just by virtue of being with us, they've demonstrated an appetite to move a piece of their financial management. But when you dig a little bit deeper into who those customers are, they actually skew slightly younger. They have above average household income and net worth, but they're also really methodical. They like to do the work. They like to do the research. They take control over their financial well-being, and not just their financial well-being, but life in general. They really want to do better. And so both their attractive financial profile and also their openness to try new things, if it's going to give them a leg up, provides a really great launch pad for us when we think about entering the banking space. And then I guess the last point I would mention, I actually think it's probably the most important, is that we think there's actually a lot of white space. Despite how competitive banking is, we think that it is riddled with longstanding orthodoxies and forces customers to adapt to rigid and outdated product structures. So we think there's opportunity for challengers to come into the space and really do something differentiated.
That's fascinating. And 26 years ago, the young of 26 years ago, it's quite a different demographic as well that you've covered. Interesting. Hanna, what about you?
Yeah, so I'm Hanna Zaidi. I'm the VP of Payment Strategy as well as the Chief Compliance Officer for our banking product. We don't want to be another bank. We're not a bank. We don't plan to be one. I think we're building something better. So most of our clients over the last few years have moved over their life savings to us, their investment accounts, their crypto assets. And one of the themes that kept coming up over and over again is if you open a checking account or offer a banking product, it'll be the last thing I need to break up with my bank. And so we took this away and we thought about, can we create an experience that fits into our existing thesis, which is to provide low-cost, high-value wealth creation tools to our clients. And we took that back and we iterated. And we started with, an account that is high interest, has banking features. And to Taryn's point, you have to start with earning trust. If I'm going to break up with my bank, I have to go and do it with someone who's trustworthy. So one of the things that we did that I think was pretty innovative was we launched something called CDIC stacking coverage, which, because we're not a bank, we were able to partner with several CDIC institutions, broker your deposits across multiple banks if you're in excess of $100,000, and be able to offer up to $1 million in CDIC coverage. And so starting with trust, that was really important, and then sort of working down, making sure we have all the table stake features when it comes to banking, And then like, how do we reimagine sort of like the existing banking experience? The other thing that's really core to our thesis is every action should go towards building your wealth. So adding in investable rewards. So when you swipe your cash card, you can actually opt to have your cash back invested in either your favorite stock, your fractional share of your favorite stock, crypto asset, or just get it in cash back. And this has actually been a great gateway for a lot of our clients who were afraid of investing, didn't understand it, found it really intimidating to get into investing. So encouraging better financial habits and behaviors. And so there's this case study a couple of years ago. We had a client, a 21-year-old woman, who signed up to Wealthsimple Cash, got a cash card, opted in for investable rewards or a cash product, and through that you have to open a trade account. And she opened a trade account. She was really intimidated by investing. She opted to get a fractional share of Tesla, built a position because like it's a risk-free way of doing it. This is effectively free money. Saw that it wasn't that scary, ended up opening a managed portfolio and started saving towards like the down payment of her home. And she, came to us and she's like, I never thought I would be able to do this, be in a position to do that. So that really fit in nicely within the thesis of everything that we do should go towards building your wealth. And so we do actually have an event coming up next week, June 11th, where we unveil what reimagining banking looks like. So I can't get into too much details, but I'm excited to show you what we're building.
And I actually just signed up for that event. Awesome. I have to say, you're not a bank, don't aspire to be a bank, but I was chatting with a 20-year-old law student last week, and I asked, who do you bank with? And he said, Wealthsimple. So that's where the lines start getting really blurred. So walk us through how you think about designing financial products, and what is there perhaps in that sort of design where banks may be vulnerable?
Yeah, I can go. I think it goes back to the intention of how you design products. And so what I mean by that is at Wealthsimple, we think about, again, like how do we create value for you? How do we help you create wealth as opposed to extracting value, which I think is a pretty radical departure in the way that traditional financial products work right now. So I'll get more specific. Like a credit card's a credit card, a TFSA is a TFSA, a checking account is a checking account at face value. But what's the difference? If you look at the average checking account at your big five, and you break it down, it requires you to have a minimum balance. You have transaction fees, you have monthly fees, you have fees for existing, you have no interest rate. And you compare that with, a checking account at Wealthsimple, you have one of the highest interest rates in the industry, you have investable rewards, no account minimums, no transaction fees, no monthly fees. So it literally costs you money to keep your money at one of these institutions. And so same product, different intentions in the way that it's been designed. I think what makes, the big five and sort of traditional banking vulnerable is that we're actually able to execute on the vision that you can create high value, low cost tools in a sustainable way. And, we've proven that by being a profitable business. And so this isn't in fine prints, this isn't promotional, this is just how we offer products. And we've done that through investing in really smart regulatory strategy and like deep treasury management capabilities. So we have an operational edge where we continue to optimize, increase our margins, and continue to offer these low-cost, high-value tools to our clients. And so that gives us, a big advantage over other challengers in the market, other fintechs and challenger banks. And so it's stuff that's difficult for them to do or maybe they can't do. And then on the flip side for banks, it's things that they won't do. So being able to offer like low-cost, managed portfolio tools, zero commission trading, high interest checking accounts, mortgage discounts, et cetera, these things create channel conflicts. They cannibalize existing revenue streams. And, they're also difficult when you're maintaining large real estate and bank branches, trying to service historical tech debt. Like, we're not burdened by these things. And so we use these things as a strategic advantage. I think the thing that I'm more disappointed with recently is that, you have these challenges, that's fine. But, just last week, for example, we had one of the big banks who missed their earnings decide to do a slew of initiatives around like adding or tripling, doubling their fees on, a variety of products. And one of which was around transfer accounts. So like if you transfer your investment account to another financial institution, you now have to pay double or triple the fees to do that. So instead of competing for your business, trying to understand like how do I deepen my share of wallet with my clients and offer better value products, I'm instead going to add disincentives, make it harder for them to leave, make it more expensive, they'll get discouraged, and not actually try to compete for your business. And I think Canadians are tired of that. We see that right now, like 1 in 5 Canadians under the age of 40 have an account at Wealthsimple. 30% of first-time home buyer savings accounts were opened at Wealthsimple. We're seeing billions in net deposits on a monthly basis. So like people are tired of this behavior. And so now that you finally have real choices in the ecosystem, people are choosing better. So
Interesting. Taryn?
I totally agree with the transfer out fee increase. That was super disappointing. I think for Questrade, well, first, when people think about Questrade, they normally just think about the online direct brokerage, but we actually have a lot more than that. So Questrade also owns Flexity, which is one of Canada's biggest point-of-sale lenders. We also have Community Trust, which was acquired back in 2019. And so we have a lot of these ingredients that we can learn from for when we enter retail banking. In addition, I think one thing that's really important is having a super clear understanding of who you're designing these products for. So we just completed a very thorough attitudinal study on Canadians. So we focus more on what are Canadians' like identities, values, and attitudes towards financial services and their life more generally, versus a lot of studies will focus more on the demographic or observable behaviors of Canadians. And the issue with doing that is that you don't actually understand the why behind Canadians' behaviors with financial services. So you don't understand the motivations, the intents, the emotional drivers. We think that in doing the work to really understand those things and who our clear target segment is, we're going to design products that are not just used by customers, but that are actually loved by them. In addition, and sort of picking up on a lot of the commentary from Hanna, I do think there's a lot of long-standing orthodoxies in banking that we can try to attack. So for one, despite the fact that we spend most of our lives managing finances as a unit, with a partner, parents, kids, friends, a lot of financial products today are really geared towards the individual. So there's limits on how many account holders you can have. There's an all or nothing approach to sharing transaction level data. It's either everything or nothing at all. In addition, there's lots of product silos that really limit customers from putting their money to work in the optimal ways. So a couple examples that come to mind for me are the fact that you can't invest directly out of your checking account, that you have to actually transfer it into a separate cash account to then go ahead and invest that money, which adds friction and takes time, or the fact that automatic deposit tools today don't account for fluctuations in customer spending. And then the last thing that I think we're looking to resolve is the fact that a lot of financial products resolve on retroactive information about the customer. So while it's great that you can tell me to stop buying my Starbucks coffee, it would be really helpful if you actually help me optimize my cash flows between the assets and liabilities I have with you. So there's a lot of opportunity as we're seeing sort of the blend of investing, saving, and spending to create products that address multiple of those key activities at once.
Very interesting. And the banking experience. So everyone talks about how fabulous your banking experience is. How do you build that? And what's generally been your strategy? And I guess strategy is your bread and butter. Go ahead first.
Yeah, sure. So we actually applied for our Schedule 1 banking license back in 2019. So it's been a bit of a journey. We really wanted to go through all of the right regulatory steps and milestones to launch our banking products because we think it's really important to building that foundation and earning that customer's trust, like I mentioned before. So we received some great news back in March. The Minister of Finance signed our letter of patent, so we're marching firmly towards our commencement date now. And at the same time, there's a lot of work going on behind the scenes. So we're moving really intensely to hire the team. We've brought in leaders from both traditional financial services backgrounds, but also big tech and consumer industries that can help apply a fresher perspective to some of the banking products and services we want to offer. Then we've got our product roadmap laid out. So once commencement day hits, we'll be launching a bunch of new and exciting products, testing and learning with our existing customer base, and hopefully launching something that's really exciting.
Thank you. Hanna?
Yeah, I think we've taken a really different approach and philosophy around, how do we offer banking products? So like I mentioned, we're not a bank. I think we're building something better. I think there's a lot of things, rightfully so, that come with being a bank that I think would really challenge how you can build like a fast-moving, nimble offering. And so, the approach that we've taken is, my team has been chipping away over the last few years at getting direct access to banking and payment infrastructure as a fintech. And this has been largely pretty unheard of in Canada in some of the things that we've been able to achieve. So we became a member of Payments Canada a couple years ago as the first operating member and securities dealer. We became a direct participant of the e-transfer network. We got a direct issuing license with Visa to issue cards. We have an upcoming credit card. It's the worst kept secret in the industry right now. And then we got approval for a settlement account at the Bank of Canada, which obviously we can't use because it's for the real-time payment system that doesn't exist, as we discussed earlier. I think all of these things basically ladder up to a couple things. We think that in order to offer the experience that we think our clients deserve and that we imagine, you need to have direct access. You need to own the infrastructure so you can, make sure you have control over the unit economics, the client experience. Right now, if you're a fintech or a non-bank, you have to go through third parties to access this infrastructure. Often, you're going to your competitors who don't have the incentive to allow you to offer products that will compete with their business. We don't have a CRTC in Canada for banking agreements with non-banks that oversee if you're abusing your sort of position when you're accessing infrastructure. And, foreshadowed this, especially at the rate of growth that we have, that we need to make sure that we have control of our destiny. And so, yeah, the thesis is basically go direct, reimagine the experience, own the client relationship, the full financial relationship. And this stuff was really hard. It's we took a lot of grit, and we didn't take no for an answer, and took a couple years to be able to do. Like, this is stuff that was largely protected and to maintain a status quo. I think that we've sort of built an ecosystem that protects institutions and not innovators or people. And so I'm glad that we have been able to do it, and again, we're excited to show you what we're building.
And on that front, Dan, where do you see banking going? Where are you heading next? I know you mentioned the commencement date, but tell us more.
Okay, sure. So when I think about what banking looks like in the future, there's a few things that come to mind. I'll probably touch on a few of the things I've already mentioned, but first is becoming much more integrated, solving for managing your finances as a unit, I think the best financial products in the future will help you spend, save, invest, and do multiple of those key activities at once. You kind of already see this in the credit card space where you're able to earn while you spend. I think that can translate to a bunch of other financial products and services as well. The other thing, I think it will become much more configurable. So I think while customers will have tons of opportunity to find efficiencies and automation in how they're managing their financial lives, they're going to have the choice as to when and how they do that. And so you can choose when you want to have a set it and forget it approach versus when you actually want to speak to a human versus when you want to manage it yourself with the right tools and resources to do so. I think it's not a one-size-fits-all approach. It really depends on the customer and also specifically on the financial product. So to make that a little more real, we know in talking to some of our industry peers, when customers get a mortgage, they really want to talk to a human. It's a big financial moment, one of the biggest financial products you'll probably take on in your life, and so you really want to speak to another human when you're going through that process. On the flip side, when you're managing your investment portfolio, a lot of our customers don't really want to talk to us. And so it's about recognizing those nuances, and I think developing an approach that caters to whatever the customer's preference is and how they want to interact with their financial life. And then the last thing, maybe goes without saying, is just that I think we're entering a higher velocity era for banking. I think with money movement becoming easier, customers are going to realize it's actually not that difficult for me to move another piece of my financial life over to a challenger. And in fact, I'm going to get rewarded for doing so, whether that's because of a promotion or because I'm just getting better access to service or a product that's more valuable to me. And at the same time, I think competitors are really going to step up their game because we've got lots more at our disposal, whether that's AI-human collaboration or APIs that let you enter new market spaces really efficiently. I think between both customers becoming more reactive and competitors doing the same, there's just going to be a higher pace of change, and everyone sort of needs to step into the new pace to win the customer of the future.
Hanna?
I think we think banking is not something that you should do anymore. I think it's something that should just happen. And so what I mean by that is, your paycheck lands, your rent is paid, your bills are handled, unwanted subscriptions should be canceled, your investments are topped up, and your taxes are optimized. Ideally, all in real time, automated intelligently. And so I think that's the world that we're moving towards. We'll call it like intent-driven finance. Just coined it.
Don't tell the regulators.
Well, I think the intention behind this is more so that, to Taryn's point, like you set the level of control that you want. You want human intervention, you can get human intervention. You don't want any, you decide the level of control, you set the rules, you determine the outcomes that you want, you let the systems handle the rest. I think soon we'll see, and if not, we will push for this. Gone are the days where you have to budget time to go into a bank branch and have stressful, annoying conversations and spend days sifting through spreadsheets to balance your books and fill out a bunch of forms for opting into a new product for a bank you already bank with, who already has all this information on you. I think we're going to be moving towards a world, might take a bit longer in Canada, but this is like the world that we're picturing, which is definitely more intelligent and more automated. I think for us, like one of the things that we're thinking about when it comes to reimagining banking, or a few things, is like your checking account, every transaction should go towards building your wealth, and B, we think going into a bank branch is a total waste of time. And in fact, you should be able to do everything at the palm of your hand, and maybe even the bank comes to you. I don't know. You'll have to tune into our event next week to find out.
Very interesting. So banking, or whatever you'd like to call it, will be full of options and bright. Thank you both.